Well, currency depreciation is clearly something where Asia has been suffering over the last few months for sure. With still rates being higher for longer, that's something which is here to stay. What's a bit more interesting for us at the moment, what we see is also, despite, as an example, if you look at the US dollar yield differential opening up versus Europe versus US, we have not really seen the US dollar rallying much more. So also there we might have seen also the peak in the US dollar, which is currently really more capped towards the level of 106, 107. And that's also which should also be in the long run favorable for emerging markets as soon as the dollar is not strengthening anymore.
And in terms of pricing the Fed, are you with consensus 2 rate cuts, the first one starting in September? Does that make sense to you, Tom?
Our consensus is 1 cut towards the end of the year. That's also where we prefer to be more on the cautious side. We have seen a huge volatility, especially the narrative changing from 7 to 1 cut to 3 cuts, 2 cuts. So also there we prefer to stay a bit more cautious with 1 cut towards the end of the year.
Okay, so 1 cut from the Fed, and you see a demand for dollar because of economic uncertainty. On the other side of it, you've got pretty much everybody else cutting first before the Fed, right, which should keep dollar supported as well. What is going on with the relationship between dollar and gold right now? Gold has had a tremendous run over the last couple of months, right? We're at about, let's bring up the chart, we're at about 2,300 right now. But is there a risk of a technical correction after a run like this?
What we see at the moment is that we've underweight our gold position, so we still recommend to hold gold in a portfolio, but we see really the risk of a tactical correction coming in, and gold is not anymore just about ETF demand, supply, and real exchange rate. It's really much more these days about central banks, and what you see is really central banks are still piling up more gold, especially in emerging markets, and we also expect the trend to continue to diversify a bit more from the US dollar.